Good morning, everybody. It's the Wednesday edition of the Daily Market Commentary for Wednesday, April the 25th. Hope everybody had an amazing trading day yesterday as we venture into Hump Day as we round our week out. Get it? The hump rounds it out. Oh, I know. Dad jokes prevail. But for those of you new to the channel, welcome. Glad you're able to make it here. Please make sure you click the subscribe button down below so that you get updates as we release them. For those of you that are new to the channel, we look at the same 10 to 12 futures markets every day, but we leave the lines on the charts. It holds you accountable. It holds me accountable, and it allows you to learn how trades evolve over time. The most important thing being that we follow the rules and follow the plan no matter what. So let's go ahead and dive right in. Yesterday was our first day that we had a bit of movement since we were, kind of slow for the last couple of days prior to that. But even though we had some movement, there's no reason to overreact one way or the other. Now, I will say that I did not participate in much of this short because yesterday one of the things that I talked about was I need a reason to get in. I didn't really have a reason, right? The reversal didn't come at a technically clean reversal point or a technically clean area, and the market fell very hard to an area that could be a bit of support. So if we base along here for a while, this then becomes an even better breakdown position. Remember, this was a short to get short below 26.11 if price breaks below there, and ideally that would happen with a little bit of basing before price would break through there. If we do indeed rally higher, there's going to be some chances up here for reversal. If I move to the 15-minute chart, we will see that there's a couple of areas in here where we didn't just go straight down. We did actually pick up a little bit of momentum towards the end of the day yesterday through most of the evening, but then a lot of that has really since tapered off in the European market hours. We're rallying up at the moment now a bit higher to kind of, there's a little bit of an area right through here, but there's a number of little areas in here where we could see reversals, if price indeed comes back up to that region, especially as we get a little higher into this area up here. Nothing that I'm quality enough for me to mark off on, though. Now, real quick, though, let's go bigger picture on the S&P. So overall, on the S&P, we still, huge picture going out to, say, a weekly chart. We still have no reason to change our overall perspective. On a monthly, we are sitting at what looks like a decent little pullback area. Most of my big picture stops, call it line in the sand, are still a little bit lower from where we are. There's still room for this market this can go down a bit more before it would rally back higher. So, it still wouldn't change our overall big picture sentiment. I mean, there's a lot of fear when you have days like yesterday, but really, the shapes and the patterns that we're putting together, especially when you go back to, say, a daily chart, and I've pointed this out before, those patterns that we have are eerily similar, right? This shape is eerily similar to this shape, right? And so there's no, and this one we had come down, we did rally back up, and we got a bit lower later on. So I think that we could still get a bit lower later on without changing our overall big picture upward trend. So I know a lot of people are getting concerned, especially on the bigger side. Yes, there's definitely weakness in the market, but it's also a fairly healthy pullback. So that's kind of the big picture side. I want to look at it though from the smaller time frame and continue on that route. On the hourly chart, what we see, price came down and it came into our potential buying area. And this is a dashed line, which means we only get long when price comes out of the area. So price did come out of the area, prompting us for an entry, and then it's just kind of been chopping along. So if you're in this one, I will tell you at this point, I I would take the tiny little profits that I have and walk away. You're not getting the move out of it that you would have anticipated or expected. The fair price value area down here for buying did hold, but the key is to know when to cut bait and walk away, and I think right now this is a good chance to walk away. Cut bait, walk away, make a little bit of money on this, and this then becomes our breakdown line if we get below this 64.69 to get short. And the longer we base above it, the better this breakdown below this area becomes. Crude oil. So crude, we had the trade yesterday that this was a touch and go, and then we changed it to a dashed line because this level is still valid. I will say I'm not a huge fan of the way we're basing in front of the level, but we have a dashed line, so that means that price has to come in and then we get long as it comes out. So that gives us a little bit more room, wiggle room, if you will, as we're starting to top off a little bit here in oil. Oil's back up to $69 a barrel. I've said a while ago that I think it can eventually get to 80. There's really not a whole lot of resistance between here and 80 in oil. On the daily time period, you've got this little hammer candle right here where we had this pop up from here that could serve as a potential buying area, potential buying opportunity. So if I go down to the 4-hour chart, I can see it's this area here, right down there through there. Now it's a little bit of a retest of this region right here to the left, which was acting as support of the prior resistance to its left. So when I move to the 1 hour, inside of that area, I have some opportunity in here. But I'm really tiny on my zone, right? It's a super tiny little level. And what we did is we went very granular. We started at the daily, we went to the 4-hour, and then we went down to the 1 hour to really granularly find that opportunity. All right, and the last one on this page, let's take a look at our gold markets. Solid gold. So gold on the bigger picture scale, right? Gold is our hedge against the overall major market movements. And yesterday, though, gold was down while the markets were down. But on a bigger picture scale, as I look at gold, what we see is a very extended triangle pattern that's dying for a breakout, and I think there's room to run it all the way up to here. I think there's a lot of potential room on the big picture scale for gold, but diving down into the weeds on, say, the hourly, we are sitting just above what could be a breakdown. So for short-term trading perspectives, I think that we're sitting on what could be a decent little breakdown if we break below this area, this 1323 area right here. Now that area has been hit a couple of times, right? Hit through there, hit again, hit again, hit again. And we've had this line on the chart for weeks as a potential reversal point. Now, if it breaks below there, we need room to roam. Well, I don't think you get much room to roam until because you've got this area right here. So there's not a huge amount of room, and you've got to keep your stop fairly wide, because in a breakout trade, your stop's got to go above the last pivot. So if I break out to the downside, my stop right now would have to be above this pivot way up here, not even giving me a 1-to-1 reward to risk at this point. So I'd like to see a bit more basing in front of here and even a smaller pivot so I can have a little bit of a tighter stop in this gold. So let's take a look at our Canadian dollar, Australian dollar, European markets, and the bonds. So starting with the bonds, many of you are still short from our breakdown. Our breakdown short was getting short below this area right here, and so many of you are still riding that short. Now, I think that there's plenty of room for that thing to continue its fall. If I look to a 4-hour chart, there's room for it to keep dropping, but it's got to give me a decent entry, and right now, I don't really have a great opportunity for entry. There's a little area right up here. If we rally enough to get short right up there, so that's an area that I would be willing to get short again if we do make it back up to here, simply because that's more of a breakout. That's a retest of another smaller breakout. In the Aussie, so the Aussie dollar that we are taking a look at, the best opportunity that I see in the Aussie is going to be above us right in this region here. And I did not draw this one out yesterday. I was hesitant because of a little bit of this basing here in front. But now this becomes a better viable opportunity if we can get that rally back up through all of this junk and all of this noise. Looking at this on the 4-hour chart, we are coming to what could be a little bit of a fair price value area for price to rally back up to help us get to there. I'm not going to be willing to take a long on this area right here, simply because I'm going against that momentum piece in there. On the euro, so the euro we had a short. If price comes into our level, it hit our area, and skadoosh, it has moved down very nicely. So those of you that took this trade, you're doing the happy profit dance. We traded all the way into it, so I'm going to take this level off of the charts. This one's no longer going to be valid for us. However, I think there still may be another opportunity above us right in this region here if we get a bit higher. The other thing you could do is look at a candle-to-candle style of trade as we're getting a bit higher. Once I get a lower low, that could be an opportunity to get in as well. On the Canadian dollar, we just had a breakdown below this price level here. And now it's kind of jumping around. I'm going to look just above that line for a retest potential. Very small area right in through here. That could be an opportunity to get short if price rallies back up into there. So all in all, these are all very connected to the dollar. And if these rally back up into those zones, that's going to give you a chance to get short. Let's see, last but certainly not least, Great British Pound, Japanese Yen. So the Great British Pound, we are still sitting above our potential breakout short, has not broken below there yet. Japanese Yen, we have our level above us here. There's nothing really to change on either one of these. Nat gas has come into its fair price reversal area. So price has hit our nat gas entry and is starting to make its movement down. This was the second time. So now this area, I would start to look at taking profits pretty quickly. You've got some fair price value right here that's going to come against you. We're going to remove this line from the chart since this area is no longer valid since we've hit it and it's starting to move our way. So nat gas is still running our direction. So nat gas and the euro today both met entry and both are running our direction, and nothing hit our stop outs because of the dashed line trades kept us from getting in to some bad ones. So overall, not a bad day of trading. Now, this is one of those days where, sure, there was a lot of movement, and I will tell you, me personally, I didn't get in on this movement because the market didn't give me a reason. It's got to prove to me. I've got to have a reason to get in, but you can't think of that as a missed opportunity day. You've got to think of that as a day where the market's just coming to your areas. The number one rule is to have a plan and follow it. You got to make sure that you follow your plan. So if you have any questions, please do me a favor. Feel free to reach out. My email address is chuck@iiefinancial.com. Until tomorrow, I will see you guys soon. Thanks so much. Later.